I just realized something about ICT and the master that will completely disprove their teachings and out them as charlatans. Are you ready for this? This is a teaching that ICT started, and the master piggybacked off of it and started a whole indicator based on it. Like if you subscribe to the master, in his package, one of the things that he gives you is called I think it's called the DR VIB or something, but it's basically the concept is the volume imbalance, okay? And it was taught by ICT, but master piggybacked on it. And the volume imbalance is basically like right here or right here. Volume imbalance is like something like there too. It's basically saying that when one candle's closed and another candle's open are different, that there's a gap, that there's a lack, there's literally like a gap in the volume there, so it has to get filled in. So then a candle will come up, fill in that gap, and then it will reject from there, as you can see it doing right there, right? Supposedly. I'm going to show you why that's completely false. The only reason that a volume imbalance exists is because these orders have been amalgamated according to 1 minute time bars. There is no volume imbalance in actuality, because we're going to go to a tick chart and I'm going to prove to you there's no imbalance. The reason being is that the only reason this gap here exists is because the minute ended here and then the next minute opened here. If they were within the same minute, there would be no gap. Even if the order jumped from here to here, it would just there would just be a move from there to there in the candle. But by the end of the close of the candle, there's no gap inside of a candle, obviously, right? But that's the thing, is they're abusing the fact that most of us haven't really studied this stuff for very long to even notice just how obviously false something like that is. So if we change this to a tick chart, so when did this happen? This happened if this is 2220, 2221, 2222, 2223. So between 2222 and 2223, there is a quote-unquote volume imbalance. Let's go to a 100 tick chart and let's find this time thing on the chart, because there will still be a time axis on the chart. Okay, it's going to take a second to load because it's okay, there we go. Okay, so it was 22, 22, and 22, or oh shoot, I already forgot. It was 20. It's supposed to be right here, right? Hold on, let me go back. I'm sorry, I literally. It's 22, yeah, 22, 22. Okay. You already saw it though, there was no gap, right? Because we went to a tick chart, and this is 100 ticks. If you went to a single 1 tick chart, then even there you would definitely see there's no gaps, right? Like here you'll still see some gaps because it still gets broken up by chunks of 100 ticks. Okay, but look, if 2222 to 2223 is somewhere here, do you see any gaps there on the way down? Because the gap is right there. Okay, so the gap here, as you can see, is just this big red candle right here, right? On the other chart, it looks like there's a gap, but as you can see, that's no gap. Technically, you could call it a fair value gap on the tick chart, but there's no actual physical gap here. The gap is literally created because of the way you're choosing to view the orders. Okay, so this is how ICT is such a fraud, because if you go on the 2-minute chart, let's go to 2222. Where is it? 2222. Is there still one? Let's see. 15. Yeah, there's still some gaps, but again, now you're seeing more gaps that weren't on the 1 minute, right? If we go to a 3-minute, let's go to a 3-minute. 2222 is going to be somewhere in there. Do you see any actual gaps on the way down? Okay, just this one. But it doesn't reject from there. So see, it's completely based on the way you're amalgamating the time on the chart. It's not actually real. It's just a lens through which you're trying to view the price action. But like time-based charts basically are in essence imperfect, because you are picking the time period of each candle, okay? And not everyone's necessarily looking at through the same time period. And all the big institutional traders and algorithms and all that kind of stuff are doing different things. So a time-based chart, actually, if you really think about it, you could find a pattern using coding backtesting, but like with your own visual eyes, I personally don't believe that looking at a visual chart is going to give you any indication of what price is going to do next, because again, it literally is subjective. A time-based chart is subjective in the sense that you are choosing how the data is presented to you, and it's not necessarily an objective. Oh, sorry about that. It's not necessarily an objective reality of the chart. The only, in my opinion, the only objective chart then in that sense is a one-tick chart where each order is represented, because then you're seeing every single order. This is just amalgamating whether there was more buying or selling within a certain time period. But nobody made the rules and said, oh, it has to be like that. It has to be, when you see this buying in 1 minute, that means it's going to continue buying. There's no actual rule that says that. Yet when you and I, when we try to study charts, we instantly start to project our desire to find a pattern, right? Because we want to find a pattern so that we can exploit something, but it's also because the human mind naturally looks for patterns, where while there are patterns in the data, there's no pattern that can be discerned in 1 day or even the span of like 2 hours. Like this chart right here is about 2.5 hours right here from where this is to where this is. Actually, it's about 3 hours. So we're looking at about 3 hours of price action right here. But looking at a standalone 3 hours of price action on any chart isn't going to give you any indication of what's going to happen, because there's no rules that are explicitly stated here. And the only, you can look at this exact arrangement of candles could technically never happen again. Or if it did, you would never know when this exact pattern of candles is going to happen and on which asset it's going to happen. And if it does happen again, it's not because it happened here, right? So this is why trading is kind of not what it seems, okay? Because all these people package that basically you can do technical analysis in one form or the other. They're just getting better at making technical analysis look fancier with things like the Masters DR, IDR, and all that stuff. But it's completely subjective. So that's what you have to realize. If you're looking at the market subjectively, you're not going to be able to find an edge very easily unless you happen to. And I have found edges using time-based charts, okay? But it was in the NASDAQ, okay? This is an asset that tends to go up in the long run. That's the only reason I was able to find a pattern in this data, is because it tends to go up. So I just had to look down and see, okay, I'm not going to talk about too much, but basically where can I place my bets that it will go up? Where's the best place to bet that it's going to go up if I'm looking at a chart on any given day, right? That's just a little hint. But it has nothing to do with how many green candles in a row or red candles in a row I saw, or whether the low of this wick and the high of this candle, there's a gap between them and all that. Because again, that's based on a subjective time-based chart, which is not objectively looked at by some sort of all-seeing algorithm. Okay, that isn't how the market works. I'm sure that there are traders out there who are good, who have found edges like me in time-based charts, but it's not really objective data because of the way it's being presented. Anyway, I've been kind of circular about this, but I'm just trying to drive the point home that these teachings will seem attractive to you just like they did to me when I didn't know much about trading, and they seem like, oh wow, this guy's got so much information, he's got so much experience in the markets, it's got to be true, there's got to be something to it. And you look and you use confirmation bias for every time it seems to work out, but your brain naturally will filter out all of the failures, and you will naturally think that a system works better than it does because you want it to, because you're greedy and you want to make money and you're afraid of being poor. Okay, so believe me, don't believe me, whatever. I'm just telling it as it is. These are the things that I had to learn in order to pass a funded account challenge. That's no great feat. And, you know, there is a bit of a luck element in, at least in that passing, because I passed it within less than a week. So I kind of got lucky, but I will tell you this, I only took long trades on the NASDAQ and I passed. I happened to get lucky for a big breakout and I hit it right as it was breaking out. But that's the thing, is the NASDAQ tends to go up in the long run. So you should basically never bet short on it. Even, well, okay, I wouldn't say never, but there's certain things that I'm not going to get into now, but there's actually one, he's kind of a charlatan, but he has taught some valid concepts. He doesn't really focus on the valid concepts anymore, though. He does more snake oil type stuff now. But Michael S. Jenkins has identified long-term cycles in the S&P 500 and NASDAQ and the Dow Jones that do result in bull and bear markets hitting their climax. So you might know that they're like every almost 6.5 years, not quite, every 6.5 years, to the day, basically, or within a week, but usually to the day, usually to the almost exact day, the market will make a major shift or make a major reversal. So if it's been a bull market to that point, it'll crash. If it's been crashing to that point, it'll become a bull market. So there are exceptions to that, but like that kind of stuff aside, and that area of space, so to speak, hasn't really been explored well because not many people know about it, and it involves some high level mathematics and physics and stuff like that really, like, I don't know very well, and like most people who do know math that well don't trust that approach to trading, because it seems it's just very unique and kind of original. So a lot of people don't trust it because it was never taught to them in schools, and they're not very free thinking in that way. It has to be, people usually are only good at doing what they've been taught to do, and they don't like to think outside the box generally. So, but anyway, kind of rambling, but unless you know a major cycle in the market, like a literal time cycle is occurring and causing a shift in the market, or again, you might think I'm crazy for this, but there have historically, it doesn't always work every time, but there have been historically been major reversals in the market. So when there's like a solar or lunar eclipse, I couldn't tell you why, but again, there's a lot of stuff going on in the markets that I don't fully understand. That's for sure. And I honestly don't know if anyone fully understands them. It might just be patterns in nature manifesting through all of reality, and the markets existing in reality just means that they have to follow some sort of pattern in nature, even if we can't visually see it. But again, rambling. But yeah, unless you know a major bull cycle is coming to an end, and you have mathematical data proving that, or maybe you have access to consumer data like credit card data or something like your Michael Burry, you can look into whatever they're called now, but like the CDOs, or if you can look into these to like mortgage-backed securities and all that kind of stuff, if you can see that like basically the rug's going to get pulled because everyone's over leveraged and in debt, unless you can see that kind of stuff, which most people don't have you and I don't have the money to like pay for that kind of data from like a data broker, you basically should be betting long on the NASDAQ. Okay, I just rambled for a long period of time to basically tell you, though, you basically should be betting long on the NASDAQ unless you have mathematical or financial data that you 100% know for certain is that's backed up by history and fundamentals will cause it to crash. You should be betting long. Okay, so anyway, yeah, basically that's how I got funded. Is I got lucky, but I was also betting on heads when heads has a 52% chance and tails has a 48% chance. So I basically was just doing what's logical. Okay, but the thing is because of everyone's being deceived by all the trading stuff, like it's most people can't even get to that logical standpoint of realizing that when you're trading the NASDAQ, betting long is like betting on heads when heads has 52%, and shorting is like trying to bet on a 48% chance. Like the rule of large numbers will destroy anyone who consistently tries to short sell the NASDAQ without any fundamental or mathematical reasoning will lose all their money, basically, is what I'm saying. Anyway, but yeah, got off track. But yeah, back to the main point. These gaps are only created by the time amalgamation. It's not real, okay? It's not real. So take that into your account, into your knowledge, what I've just taught you here, so that it'll help you going forward, and then maybe soon you'll be able to see something that no one else has ever talked about. And that's, by the way, that's when you know that you're starting to get good at trading, is when you start to find things that other people aren't talking about, and then you start to test them and they work. That's when you're going to become profitable. And see, that's the thing about YouTube, is there's a lot of kind of needy people on there who are desperate to get a strategy handed to them, spoon-fed to them, or taught to them by people. And it doesn't really work like that. And I know that's hard to hear, but the reality of the financial markets is, if you have an edge, you really shouldn't share it. I did share with you guys an edge, but only because like it's not like the best edge. It's a good edge, but you know, there wasn't clearly defined risk parameters for it or everything. It's kind of just like a general dollar cost averaging the NASDAQ type strategy, but again, that most likely doing that, what I taught in that video, will outperform most aspiring traders, just if you do that. I'm just telling you, as long as you have the leverage to handle like the proper, enough drawdown, which will happen, you will, if you can handle that drawdown, your account will be green in the long run, and you will make depending on how much you're starting with, but eventually you will make 6, 7, 8, 9, 10 figures doing that. I can guarantee it. If you stay in the game long enough and you can handle the drawdowns, you will be a billionaire eventually. But that's up to you. But this charlatan master ICT stuff, again, they're selling courses. ICT doesn't sell courses anymore, but he's making a lot of YouTube ad revenue. So he's basically selling his course through YouTube ad revenue. Mas7er is selling courses. That dude has made high six. I mean, he might have even made over $1 million off of his Mas7er students by now. He may have made, I don't even know. He could have made 2 million by now, but I know he's made at least like 600K so far. But I actually did that math figure like months ago, and so if like enough people have stayed subscribed to him, because he charges a monthly fee, then he definitely has made over $1 million. So yeah. Anyway, I'm not hating on these guys because I hate them or despise them. I'm just trying to protect you from fraudsters who are trying to take your money. Look, we all understand that it's a hard life, and everyone has to feed their family. Everyone needs money. I'm not necessarily blaming these guys for lying or being delusional, whatever it is. But the reality of it is, like, you don't have to hate them, but I would just tell you to avoid letting them deceive you. And I did have this is going to sound, okay, this is where, again, I'll probably lose some people who think, people will write me off because I say this, but I know ICT claims to be a believer in Jesus and believer in God. I also am. I have had spiritual encounters with God and stuff, and this is not to boast. I'm not special as a result of it, okay? If I'm special, then everyone's special. We're all special in our unique way. But I did have a spiritual dream, and I don't have these all the time, but every once in a while. I had a dream. It was basically God addressing the fact that I was going to continue persevering or pursuing trading in the search of profitability. I had this dream, I'd say about a year ago. And the dream was basically, I forget if I talked about this in a video before, but the dream was that I was in this dry, almost like an apple orchard. I'm from California, so if you've ever driven down through the Grapevine, you'll know what I'm talking about. Like all those orchards where there's like rows and rows of like, I don't know what they have, like orange trees, like probably apple trees, cherry trees, types stuff like that. You'll just see those if you just drive down the I-5. If you're going from like Southern California to Northern California or vice versa, you'll know what I'm talking about. So imagine like one of those, but it's like pretty hot out there, so it's pretty dry out there, so like it's just because of the crazy irrigation and water usage that they're able to maintain those orchards. But picture if one of those orchards didn't have irrigation. So picture almost like a dried out orchard where there's not much to go around for everyone. And that orchard to me was like the financial markets. And what I noticed in these orchard was on the ground everywhere as I was walking through it. I kind of was in more of just a dead grassy area to the side of the trees where there were no trees. And all over the ground were snakes of various shapes and sizes and species. There were like 10-foot long, fat titans, like ancient Titanoboa snakes. There were little snakes, but there were snakes everywhere. And I didn't really understand the dream at the time, but what I came to realize about it is that it was a warning about the trading education world and all of the quote-unquote knowledge that exists that is spread around among traders. And the origin of that knowledge is all those snakes, and all those snakes are the trading furus. Some of them are bigger, some of them make a lot of money, take a lot of money, some just come and deceive a few people and get a little bit. But the orchard is so full of snakes that it's very easy to lose your money to one of these charlatans purely because you believe that they're trying to help you. And that's the biggest mistake you could make on Wall Street, is because Wall Street is a zero-sum game, right? If I make money, when I make money in an account, even if it's a prop firm, right? That means someone loses money. If I make it in a prop account, that means the prop firm loses money. If I make it in live trading markets, so that again, in a roundabout way, it is somebody else's loss, right? Somebody eats that money. It may not be one person. Maybe one person eats about half that loss and another person eats the other half of that loss. But in the roundabout way, the amount that people win out of the market is lost from other people. So why, in a world where that's the reality of the situation, would a trading guru actually be there to help you? Now, I understand there are some people who teach some truth, but in the vast majority of cases, if someone's charging you to teach you something, it's because they're trying to feed their family or feed themselves off of that money. And it's not because their trading system works, because if their trading system really worked, they would abuse it with optimal F, like I've discussed in previous videos. They would abuse it to the maximum with optimal F, and they wouldn't tell anyone, and they would abuse that edge until it goes away. Because eventually it probably inevitably will go away regardless. I mean, not all edges will, but like a lot of edge, like if it's like a day trading type edge, most likely it will go away. Which is why like most back-tested day trading strategies will fail in the long run. They'll work for like 6 months, a year, but like eventually like some hedge fund or some trading desk or someone at some big institution is going to figure out what's going on. They have tools, dude. They have tools, and I can't explain them because I don't understand them. But they think about it this way. They're always looking for new ways to discover what traders are trying to do, and they're always going to try to counter it, right? And I'm talking about retail traders, or just, not just retail, but everyone. They're going for retirement fund money, people putting their money in their Roth IRAs. That's why recessions happen, by the way. They scare people into closing positions on their Roth IRAs and stuff when they're down, And that's why the people who kind of have the Warren Buffett approach are the only people who usually walk away profitable in their Roth IRA by the time they retire, which is where they just literally perma-hold the S&P or the NASDAQ for like 50 years. And then they retire, and they survived inflation and then some. Like, those are the people who really beat the market when it comes to like a Roth IRA or whatever you call them, 401ks, all that crap. But yeah, I don't know. I'm just kind of rambling, but there's a lot to be learned, and I know that my videos, whatever, they're kind of long, sometimes a little long-winded, but I'm telling you this stuff to help you guys. If you don't want it, that's fine, but really, you shouldn't trust these charlatans. Like, I'm telling you, dude, trust me. It's not like I haven't tried to study these guys' stuff. It's not like I haven't ever wasted money on a trading educator. Okay, I'm speaking from experience. They're selling pipe dreams. Okay, do you know what a pipe dream is? If you don't, go look it up. Okay, they're selling pipe dreams. They're preying upon your fear of being broke and your desperation to make enough money to like live comfortably. Okay, So if they're preying on a large group's collective desperation, and they're taking, you know, a couple $100 from each person in that group, even though you're desperate financially, that's not gonna hit you that hard, right? It's not gonna completely crush you. Like, you'll bounce back from it. But to them, if they can just take a little piece of everyone's pie, they get the collective amount they end up with is a lot of pies, dude. They have a lot of whole pies. If they take a little piece of everyone's pie, and you take a little piece of, you know, 5,000 people's pies, you're gonna have freaking 50 pies or something. You know what I mean? So, yeah, I don't have much else to say, but I'm not trying to screw with you guys. I'm not trying to get clout. I don't have a lot of subscribers. Like, I'm not try-harding my format. I'm not going crazy with the clickbait thumbnails. I mean, I might try harder again with that, but just haven't really been in the mood for that. Maybe I should, but like, I'm just trying to do this more organically and just honestly, which is that, like, I just genuinely I'm just here to get out into the trading world and, like, give people a fresh perspective, and, like, and just if you've just been doubting these trading educators, I'm telling you, that's not just, like, happening for no reason. It's probably, like, it's either you realizing, or, like, God is urging you to, like, realize that these people are greedy. And, like, if you want to be a successful trader, you kind of have to figure it out on your own, dude. Like, it's just what it is. And the sooner you can accept that, the closer you are to profitability. So the sooner you give up on all these trading strategies that you're looking up on YouTube, the sooner you can actually start making some money. Like, literally, just stop watching YouTube. Just get off YouTube. Literally get NinjaTrader and just start back testing stuff. Start calculating stuff. Start trying this indicator. Start trying, I'm not going to get into it, but just start whatever comes to your mind to try. Just try that, and try to try different variations of it. And I'm telling you, it's going to take you night and day. You're going to be grinding, dude. But when you finally figure out what works, then you'll know that what I'm saying is true, and that all these trading strategies are complete crap, dude. They're complete crap. So, anyway, this video went way too long, but I hope it helps somebody out there. Take care, guys.